Hello and welcome to Leviathan News. I'm your host, Samuel McCullough. Today is November 27th, and as always, I'm here with DeFi Advisor. How are you doing today, sir?
I'm good. What's up? How are you? I don't know why my camera immediately, as you press the clip button, stopped working. I literally turned it on the second before, but I'll try to work it out. And it's good to have you, to have everyone on here, see some people joining, and you, Sam. And honestly, I'm quite excited to have the pair that we have today. I've been following them for practically years now when I think about it, like them individually, and in the last year or at least I don't know, half a year, maybe a few months since I've noticed David tweet about Superseed for I think it was really early on, and I started asking him, "Oh, David, what is that? What is that? Like, are you coming? Are you coming?" He said, "Oh man, it's a bit too early." But we're going to come whenever it's going to be like the right time, and I'm really excited to have the guys from Superseed on. What's up, guys? David Iach and Mesky.
Happy to be here. Yeah. You were one of the first people to reach out about me joining a podcast, and happy to finally be here.
So Mesky. Welcome.
No, sorry. I was just gonna say, DeFi Advisor is always on the pulse, always has been. So no surprise that he was on top of Superseed.
Occasionally, only occasionally.
Yeah. Super happy to be here.
Okay, so if anybody doesn't know Superseed already, it's a cool new project that's taking a fresh approach to scaling and L2 design by introducing self-repaying loans enshrined at the base layer. It's pretty cool. So it's built as an optimistic rollup, but you're able to essentially use it as a CDP to take loans out. And if you have a high enough collateralization ratio, you can get 0% interest. And so it takes all the things that we love in DeFi, which we've been building for years now, and it moves it into its own network. It's really cool. So we have David and Mesky here to kind of break it down for us, give us a lowdown on how Superseed is planning to bring DeFi to the L2 level and create something really cool. So welcome, guys.
Great intro. I love that. That was very on point.
He's the best.
Yeah.
So I think that's the place to start, is that like you guys are essentially taking Aave and turning it into an L2 with all the cool stuff that comes along with it. I mean, it is what it is. So I mean, I think that's the clearest way that I can think of it, is you're taking the CDP protocol and then you're putting it into an L2, and then you're rewarding people to come and use it by paying down their loans and just like turning DeFi into something really cool.
Yes, close. David, do you want to make the little correction there when it comes to Aave comparison?
It can be compared to Aave because Aave also has like a CDP.
Right. You're right.
So
Maker.
I would say the best comparison would be Maker, but it's also like a combination of different primitives that we are in a sense using, plus a few that are building that we are building on our own. So we have the L2, we have the CDP, but we also have 3 new primitives, which are super collateral, proof of repayment, and repayment vaults. Those are new things that have been like we had to actually name them because they didn't exist before, and the combination of everything makes our product quite unique in the crypto space right now.
I think before we dive in, you guys have a long history on Arbitrum and Dopex as well too. So maybe you guys can talk about like what you guys have previously built and how you got to this point with Superseed.
Yeah. David, you want to go first with your backstory?
Yeah, I can. For me, I'm a first-time builder, right? I didn't. Dopex was like I was early. I was one of the seed investors in Dopex and a supporter from early on, and I continue to be a supporter. And the team which is now Strike, is also is going to be one of the first teams to deploy on Superseed. So
Nice.
day one,
Cool.
we'll be able to trade options on Superseed, and not just for assets like ETH and RapidDC like you could on Arbitrum for a very long time. Rather, it will be open for a lot more assets, maybe even meme coins. We'll see. So it will be really cool once you'll be able to basically take almost any asset and have the option to get leverage on chain for new tokens. And yeah, but I didn't actually work for DopeX. I was simply an investor and supporter of their team.
What about you, Mesky?
And friends.
I didn't work for DopeX either, but a content creator, followed it very closely. I actually worked at a DopeX adjacent project. I worked on Plutus DAO for almost 3 years, actually.
Oh, nice.
We were one of the first kind of DopeX spin-offs. And then, after that, I knew David from DopeX, or DopeX circles, should I say. And one thing led to another. And I left Plutus around the time they decentralized, and there's a really cracked new team, by the way, running Plutus. So they're still going, which I love to see. Doing some very cool stuff. Shout out to those guys. But yeah, found David early this year. We spoke about Superseed, and it just clicked very, very easily. And then on, I mean, we're 11 months in, and getting closer to pushing some really cool stuff live.
So what was the inspiration for creating Superseed?
This is a David question.
Yeah, basically, I had this idea back in 2021, not the full package, but like the core part, which is the CD protocol, where fees shouldn't go towards burning the governance token. Rather, once you generate fees, they should be used to repay the debt of those who use the native token as collateral. That was the core of the idea at first. And I was trying to make people build it, right? Because I was an investor. I was investing in seed projects, and it wasn't in my mind that I should build this, right? Someone should build this. Here's a cool idea. Build this, and I'll invest, right? And I even talked to a few people about that, but like nobody, like everyone had their own projects or their own ideas that they wanted to build, and like eventually nobody started anything like that, right? So, because for me, this would have been like the perfect product in the sense that I would like to own a DeFi token that basically has upside potential, right? I can own it and be long the crypto market by owning an asset like that, but also having the possibility of borrowing against it, like taking out a loan that I don't have to pay back because it gets paid from the protocol fees. That was the core of the idea, right? Have an asset that has upside, so I can remain long, I can stay long the crypto markets, but I also have liquidity, right? I don't have to sell it in order to benefit from price appreciation. I could just take out a loan, and then protocol fees will go towards repaying my debt. That was the core of the idea. And then over time, I saw the fact that L2s were advancing quite rapidly. I also saw something interesting that I tell people about sometimes, which is like if you actually pay attention to what happened in Web 2, and is also happening quite a lot in Web 3, is that quite often platforms tend to capture a lot of the excess value created by applications that are being built on top of platforms. And going back to Arbitrum, I actually saw that quite well, because we were talking about DopeX and certain spin-offs, and a lot of value has been created in that ecosystem by those apps, right? A lot of people came to Arbitrum because of the apps. A lot of newer projects spun out of Topex and built something else like JonesDAO, Bluetooth, or whatever. But most of that value didn't necessarily translate into a higher market cap for let's say those apps. Rather, it was in certain ways the major benefit went to Arbitrum, because look, Arbitrum is a platform or like a chain that has so many cool things you can do right on top of it. So yeah, seeing that and seeing the fact that everything shifts towards L2s made us think, okay, if we have like a super app, which a CDP actually is, because you are also creating a stable coin that will have integrations with potentially hundreds of other apps, right? It makes a lot more sense for it to exist on its own chain, and all those integrations and all those benefits that come with the excess value that is being created out of a product like that, to somehow flow back to the project rather than to someone else.
Yeah, we just had on Semantic Layer yesterday, who's approaching this from like a little bit different, not at like the base layer, at the network layer, but rather at the protocol layer, in how they're using application specific sequencing to ensure that protocols can capture the MEV. So this takes it one step further and like moves up the hierarchy, and it says, okay, we're just going to enshrine this at the network level now, right? The CDP is built into the network, and so like all of the transaction fees, regardless of MEV or not, will be captured and then returned to the CDP holders in the form of paying down their loans.
Yeah, I would make a slight correction there. It is not built into the actual node code, right? We're not changing the tech stack itself to introduce that. It's built on top of it, but it functions like in a very symbiotic way, right?
Yeah. So the sequencer revenue is taken and then used to
repay loans, and then interest paid by borrowers would use a different sort of collateral, not the token itself. They also go towards repaying the loans, and then proof of repayment, which is something we came up with, also gets used to repay super collateral borrower loans. So it's a combination of things there that all basically are designed to maximize in a way the flow towards repaying super collateral borrower loans.
Okay. Yeah, I did want to ask about the model that you guys are using for CDP loans. Is it more like a maker model or like liquidity? Like how do the loans get taken and redemptions? Like which kind of model are you basing this on?
Yeah, it's more like maker than liquidity. So I think I want to see how it will work with liquidity. But I have my doubts when you have to in a sense put the peg risk in the same bucket. I mean, no, they're putting the peg risk. They're shifting the risk to borrowers, right? So if you're a borrower, you have to, in a sense, be mindful of the peg. If it depegs you, you might end up getting liquidated, even though you might have a high C ratio, just because you're not paying the highest amount in interest. Talking about
that makes sense, right? Like to me, that makes sense, right? Because like if it doesn't really matter if you have a high or a low collateralization ratio, as long as you're paying the interest, that's what matters, right? Because the price of money is determined by three things. It's determined by the collateral, the interest rate, and then there's like two other things as well too, like foreign exchange rates or whatever. But the main thing is the interest rate plus the value of the collateral. So if the interest rates can't like fluctuate, which they can't in liquidity V1, then that leads to like peg issues. In V2, the peg issues shouldn't be there because it should flow, or essentially the people that want to try to game the system and have like low interest rates or pay too little to the protocol, it's not going to work anymore, right? You have to pay higher interest rates. You have to pay market rate. And I think it's pretty genius of what they've come up with in the V2 design.
Yeah, well, we'll have to see. I wouldn't want to be dealing with that risk as a borrower, right? From my perspective, I don't want to monitor where I am in the scale of I don't know. Is my interest rate sufficiently high to prevent a liquidation risk if I go in vacation for 1 week, or will everybody change it higher and then I just get liquidated because I don't know, someone sold a bunch of stables?
Well, I know they're setting up different. I know they're setting up a vault system so that you can come in and say like, put me at the average interest rate and adjust that over time based on how the redemptions are happening. So like in theory, like you can set it up where you don't have to think about it. It's just someone else is managing that interest rate risk for you then.
Sure. I mean, there are probably going to be like workarounds there to make it less risky. But I don't think, in my opinion at least, that borrowers should deal with interest rate risk as well, right?
Right.
I think they have enough risk by having to monitor their collateral. When you introduce that additional risk, where there's two ways where you can lose collateral. You can lose it because your C ratio went below a certain point, and you can lose it because I don't know, your interest rate wasn't high enough for a while, and someone decided to sell a bunch of stables. I would prefer not to deal with both of those at the same time.
Yeah,
I think.
Yeah, go ahead.
Sorry, Sam. No, just to say here, I think I align with David here. I do think there's going to be a subset of like niche DeFi power users who will enjoy the optionality, right? But it does feel like a lot for your average kind of DeFi Joe. But we'll see. Mm-hmm. We'll see, right?
Yeah, like the interest rate question is always an issue, right? It's like, how do you manage the interest rates? Like, well, this is one of the things that I wanted to ask you guys, is that you're providing interest-free loans on people who have collateralization ratios over 500%. So essentially, like you can take a fifth of your value of whatever you deposit into your Superseed as a loan, and essentially if you put 100K in, you can take 20K out. I would wonder if you guys are obviously limiting it to like a very high collateralization ratio. If you looked at like Liquidity V1, which also had like no to zero interest rates, their collateralization ratios pushed up into like the 500 to 600. So, I guess it's like the right value, but still it would seem to me that people would just take that interest-free loan, dump it, and put like pressure on the pegs. So like, how do you manage those peg risks?
Yeah, so great question. First of all, it's only one asset that you can use this way, right? To get interest-free loans. If you have a high C ratio, which is our own governance token, you can still borrow using it and you pay interest. So from that perspective, it's only going to be one set of borrowers who have access to that. This is why we call it a super collateral, right? It has a special place in the CDP. And second of all, because of repayment, we have like something really, really cool because of repayment and because of repayment vaults. So how repayment happens in Superseed is, think of the following: sequencer revenue gets generated in ETH, right? So every block, people are paying fees to be able to transact on Superseed, and they pay fees in ETH. Now, in order for that repayment to happen, that ETH has to be converted into our native stablecoin. Now, each time that happens, that puts upward pressure on the peg, right? Because it's like a constant swap, like somebody is constantly bidding the stablecoin. And who's that? Well, everybody who transacts on the chain are in essence basically bidding the stablecoin. So that's the first source of fees that's not collected in actually the stablecoin, in something else, and has to be swapped. And the second part here is that we're not just collecting fees and then instantly in the same block burning that. Rather, they go into what we call a repayment vault. So let's say $1 flows into a repayment vault, and out of that repayment vault, it goes slowly over time and repaying pro rata the loans of people who use the native token as collateral. This is really, really important because this is like a new monetary tool that we can use. Because this repayment vault can be dynamic, where we can accelerate or decelerate repayment, it's almost like an additional tool that you can have besides interest rates, right? In certain times, you could accelerate the burning of that, right? When you want, for example, to allow people to take out more debt, because you're limited in how much debt you can take, for example, using the Superseed governance token. And you can accelerate or decelerate that. If you decelerate, you get a lot more of the supply of the stable coins basically sitting in the repayment vault, right?
Yeah.
Out of the market. So it can just accumulate there over time. It's basically almost like a free version of a DAI savings rate from the perspective of a stablecoin sync.
Yeah, I to me it seems more like the early synthetics design, or kind of the V2 or the mix of the early and the V2 synthetics design, where you have a governance token which provides highly collateralized loans with 0% interest, and then you're mixing that in with like a traditional CDP protocol where you can use like ETH or other assets to take like interest paying loans, but then all the protocol fees are being used to essentially, like you said, provide like a constant TWAP on the token, so there are no like peg issues, and essentially like you're subsidizing the interest rates on Superseed with the protocol revenue, or with the network revenue.
Yeah, you can think about it that way.
Yeah,
right? And it's
You
also
get it, Sam.
a way. It's a way of changing basically the way value accrual can work in crypto for a token.
Yeah.
One way of explaining it that I use is think of how what the token was supposed to be back in 2017, right? People were building apps back then, and their token was supposed to be like currency inside the app, right? That was what we called utility tokens back in the day, right? Someone builds an app, and in order to use the app, you have to use this token as payment, but it didn't work, right? It failed completely. Nobody is building apps like that with some sort of a utility token anymore. Everything shifted towards what we now call governance tokens. And with governance tokens, okay, you own the token, you don't have to use it as payment inside the app, but you can use it to vote on certain upgrades or treasury. And if the protocol itself is generating a lot of fees, there's some sort of mechanism for value accrual, right? Maybe it's like Maker does it with buybacks and burns, right? They constantly just buy Maker tokens and burn them. So over time, the supply shrinks. Or you have V tokenomics or whatever. But that's currently the state of the art for protocols in crypto. And we believe that there's actually a better way, right, to do it. And we have a saying: burn debt, not capital. Don't just burn your governance token, burn debt. It's more powerful. And you can think of what a super collateral token is. It allows you to take out for potentially years worth of yield as a loan upfront. So you can think about like you're taking a loan that might represent a few years worth of yield. You take it as a loan and you don't have to repay that loan, because as that actual yield gets generated, it goes towards deleting your loan or burning your loan or repaying your loan. right? So from the perspective of time value of money, it's way more capital efficient to do it this way than any other way, right? Because you actually get profits from the future today, and you simply have to maintain that. You just have to maintain that position in the CDP, but it's in my opinion a superior way of value accrual.
That's cool. That's a good point that you can you're essentially allowing them to capture future yields by taking the loan and then this interest-free loan, and then they don't have to pay it off, and then they're kind of waiting for the interest to come and pay them off. So they just capture there. It's I think about a lot of things have influenced this. Obviously, I mentioned synthetics earlier. I also think that oh my gosh, I'm sorry, I just blanked. What was the first self-repaying?
Alchemix.
Yeah, Alchemix. Yeah, Alchemix was also in this as well too. Obviously a little bit of design differences, but still, I think it takes from a lot. And the sequencer revenue is very powerful. But I think the core of it is that you need transaction volume, right? So where is the how do you expect to build out an L2 when there's many other competitors out there, and especially some big incumbents that we have now that is able to capture enough users to come over and use it? I know that we've seen some upstarts like Berachain who haven't launched yet have built out a really great wide community and support from inside the industry, as well as some other like L2s have done the same as well too. So just interested to hear about how you guys are focused on growth.
Yeah, so we don't expect sequencer revenue to be the primary source. Actually, we actually expect interest paid by borrowers who use different type of collateral to be most of the time the primary source, and probably the secondary source will be proof of repayment, and the third one should be sequencer revenue. That's how we internally visualize it. In terms of how to make TL2 successful, I think what's important here is to be focused on something, not try to be everything for everyone. And we have a clear DeFi bias. We are people who grew up with DeFi, right? Being there right from the start. And a lot of the projects that will deploy on Superseed day one are projects that are coming from maybe our Arbitrum days, or people who we know from years back that are really excited about coming to Superseed. So that's the first thing, having a clear focus rather than trying to be everything for everyone. We've seen that doesn't really work. And we also have a different approach to when it comes to our go-to-market strategy. So we're not going for the same we've seen there's quite a bit of a fatigue right now, and probably guys know Andy from the rollup. He posted something yesterday about how people are fatigued about L1s and L2s, and I actually said, well, there probably were more meme coins launched in the last hour than all the L1s and L2s that will ever be created, right? People are not necessarily fatigued about new tokens or new projects. They're fatigued about the current way of launching, where you're launching a chain and then you're basically farming people for a year or two. You get some questionable metrics to look good on certain analytics website, and then you launch with a super tiny float when you launch the actual token, and usually with a very high FTV, and then it flops, right? That's what we have seen in the past year and a half.
Well, it
So
doesn't
that
flop
was-
for your VC investors who
It
have
doesn't flop
captured
for them. Yeah.
like 100x returns, right?
We're getting to the point. Yeah.
For the community, it's terrible, right? And people are. That's what people are tired of, right?
Mhm.
Oh no, another one, right? And it's gotten worse and worse with each launch. And we have a different strategy there. We want to involve the community since the beginning of the chain, right? And we do have an open sale for people who want to participate in Superseed. People can read more if they are interested in that. It's on our website, or not on our website. They can check it out on Twitter. But we have a different approach. So we believe in building community and having them as early as possible with us. And yeah, it's going to be something different than what we've seen recently, and we expect that a lot more people will be excited about that than the current way others are launching and trying to build their communities and so forth.
Yeah, I think it's like, to dive in here, I think it's much of a value question. You know, all these projects always say community first, but what does that actually mean, right? You know, with Superseed, we're actually making these conscious decisions to put the community first, right? So that starts from things like 100% of the profits that you guys talked about. They all go back to repaying the loans of these super collateral borrowers from 3 different sources. I don't know of any other blockchain, layer 1 or layer 2, that does that, right? At least not in as capital efficient of a way as we do. And then the second thing here is, David mentioned, you know, the Superseed Foundation is having the super sale, and it's actually going to be in a way where 20% of the token supply is being sold in this sale, and anybody can participate. And what's behind this isn't, Sam, like you mentioned, there's 0 VCs, none. It's just a kind of a minimal amount of funding that we chose to raise from close people to get to this point. And behind all that decision making is the fact that we want to reserve a good portion, a healthy portion of that supply to our community early on, not as exit liquidity to VCs and insiders, right? So that's like the framing I would put there. On Superseed, community first isn't just, you know, buzzwords pieced together. It's actually, you know, a series of choices where we feel like we're living that truth.
That's cool. Yeah, you really found some great people to bring on.
No, you know, and it actually resonates with the exact point that they are making now, because for those of us who remember DOPEX, and I was a complete noob back in those days, but when you entered the DOPEX server, it was just something else. You were just like, what? Where did I get into? Like, what is even going on there? There's like a million roles and like different groups and cults, and you could actually see that. For me personally, back then, I've never seen a community being taken to such an extreme level of like inside jokes and memes and like a specific culture. Like you could actually see that these like extremely online natives, and I definitely completely wasn't at the time. I'm still not am to these levels, but it was just something else. And I really think it resonates with the point that David and Mesky were just making about okay, how do they actually build something different that really takes some of the core DeFi infrastructure and really reassembles it in a way that okay, we can actually play a new game here, not only at the dApp level or stuff like that. We can actually go all the way down to the chain and use like these interesting like mechanisms like alchemy. Because just before you said it, I also like thought to myself, okay, it's like a blockchain that is alchemix.
Yeah.
Kind of great.
Yeah. I think what you said is you know, earlier on is spot on. There's minor differences to alchemix. I'm not referring to that, but like to think about how just we're excited about the value alignments, right? Because for the first time ever, the builders, the users, us, and token holders are all kind of aligned in the same direction, because all the value flows back to super collateral, right? And we're in this kind of, we hope to see a perpetual kind of positive flywheel, where the more folks use the chain, the more debt gets repaid off, and we can make it into a true kind of a movement, right?
Yeah, I mean, it's if you're incentivizing everyone to use the stablecoin that is the core part of the network, and it's built into all the apps, and everyone kind of is either paired with it as the primary liquidity source, or they are like use it for other means, like, I don't know, all the apps that are coming. It really makes sense, right? And especially you can fend off those peg issues by having that TWAP and the usage in all the apps, then it definitely makes sense to use it that way. What type of collateral are you guys going to support?
Apart from the Superseed token, you mean?
Yeah.
Well, we're gonna be quite conservative. We're starting with ETH, staked ETH, and potentially like some version of BTC on Ethereum. Not sure if it's gonna be WBTC or the Coinbase version. We'll have to see, because you probably know that there's a bit of debate right now surrounding RepBTC.
What made you guys choose like the super chain and the optimism and that stuff? Because I actually think that optimism in a way is also very much community oriented, the whole public goods attitude towards things. I think that with all the how is it called, retro public RPGF?
PGFs, a lot of things like that.
I think that this principle of, okay, let's share the value, let's keep it between the actual users and within the ecosystem, it resonates with it as well.
That was part of it, but like the most important reason why we chose to go with the OP stack instead of the others was that we were seeing that there is a clear vision and strategy when it comes to onboarding new chains to use the OP stack. And in my opinion, when you have thousands of brains, right, focusing on improving the stack versus a team when it comes to other stacks, it's just gonna, over time, those that actually have more eyes and more brains working on improving the stack will eventually win, right? And what they managed to do, what Optimism managed to do, is convince a lot of really top-notch teams to adopt the OP stack and to contribute to the OP stack. And this was clear already at the late last year. We did like a technical audit ourselves, right? We had some help, external help, to go over like the code and roadmap. And it was because we were like, I would say, with such a long background in Arbitrum, my first bias was Arbitrum. And we had discussions with Arbitrum as well. But Arbitrum is a lot more focused on their own chain, right? They're not as much focused on onboarding new projects to use the Arbitrum stack and getting them to contribute to the Arbitrum stack and so forth. Way less focused than with Optimism. And right now, I think if you actually check the repos and so forth, way more contributors are contributing, way more people are contributing to the OP stack. It has a lot more activity than anything else, basically. Not just Arbitrum, but any other stack that you could potentially use for NL2. So yeah, that was the primary reason. And of course, sure, it matters that we are also aligned on things like what should happen to the value that is generated on chain and so forth. Those things matter as well. Like, there are clear benefits with being a member of the super chain. Apps that deploy on Superseed can benefit from funding from Optimism, right? There are multiple rounds like that that they are actually focused on the super chain itself, not just Optimism as a chain. So if you're a builder and you decide to build on a chain that's part of the super chain, you could actually get access to grants, which is really cool for people building on Superseed. And things like that also matter. And yeah, I would say that was the major thing, and the rest were like bonuses.
Yeah, I mean, Optimism has been giving out a lot of grants this year. So, but what I love about Optimism is that they've really gone out of their way to provide people who want to launch their own L2 the ability to just try new stuff, right? Like to do the things that you guys are doing, or to enshrine points in a L2, or to just try a bunch of different stuff. So like every L2 has its own flavor, and people can really test out to see what works and what doesn't work. So when are you guys going to be live?
Post when we actually finish the token sale, the chain will be live for the public. It's already, we already have our mainnet in like we have a private mainnet where apps are deploying, so that we have a bunch of apps ready day one and infra, but it will be available for the general public once we finish with the token sale.
Nice.
Yeah, maybe a little, a couple weeks delay. Probably, this all depends on when the token sale finishes, right? Until it sells out, or 30 days. So that's why it's tricky to give you a timeline. But it's our, biggest priority right after the sale finishes.
And I think I also wanted to kind of wrap up with some questions about like what you guys are excited outside of Superseed. Like, is there anything that's been popping up in your feed that you've kind of been interested in or perked your ears?
Yeah, man, I'd love Bitcoin to go over 100K.
Maybe
a
some
couple things. What was that?
Go ahead, Mesky. Sorry, because I was also wanting to add, like, are there any dApps that you would really like to see come to Superseed?
Yeah, a ton. I think, like David mentioned earlier, we're really kind of honing in on creating a kind of unique and strong DeFi ecosystem, right? So you'll have these on-chain options, you'll have non-liquidatable perps, really great composability and kind of DeFi Legos with Dolomite when it comes to lending and borrowing. So, if you're a DeFi builder and you're doing new stuff, don't hesitate to reach out. If you have a unique angle, we're always open to talk. And I think something I want to highlight there is that we really take care of our builders, right? Because on Superseed, you're not, one of 1,000 apps. You are like a part of our builder circle, and we take care of our own. We connect you with other builders. We give you the full marketing treatment, ranging from our podcast to announcements to a lot of other stuff. We have a whole playbook for it. But we treat builders as first-class citizens, right? Because we heavily believe in the fact that when our apps win, it benefits Superseed. And Sam, this is what I was talking earlier about the alignment, right? We have everybody kind of going in the same direction, because increased usage for Superseed kind of flows back into everybody's bucket, if that makes sense.
Mm-hmm. Nice. Very cool.
Yeah. But to answer your question, sorry, Sam, I mean, DeFi Advisor, you got in there with a good one. But I think the AI agent stuff is very cool. I don't know how it plays out. Feels like it's a lot of hype right now, not that much substance. But something I'm definitely keeping an eye on personally.
Yeah, it's different. It started. Like, it's happening, you know what I mean?
It's happening for sure.
It's happening.
Have you read the let's see, I posted this the other day. It's this article by Alex Good, and it covers, I just got to find this in my thing. Oh, here it is. It's called The Black Print.
I haven't. If you can link, that would be great.
Yeah, this is like one of the more convincing things to read about AI agents. This came out in December of last year, and essentially it's a manifesto about like how you should view the world. And let me just scroll down here. It talks about like crypto and AI and everything. So right, so he's like AGI is coming, and fiat is going to go away because the social contract has been violated, right? It's not going to be replaced by gold because AGIs have no need for gold, and global currency in an AGI would probably get replaced by crypto in some sense, right? Because it's machine native. So the crypto gets replaced. The cryptocurrency it gets replaced by will need to appeal fundamentally to an AGI, and therefore probably facilitate AI-based transactions. And so like Bitcoin's probably going to survive, but almost everything else is unlikely to be useful for the AGI because they're concentrated ownership structures and their lack of compatibility or usefulness for data or AI functions. And so this is going to be like create some epic market volatility. But the AGIs are going to start to release their own tokens, which we're seeing now, and those will kind of evolve into this like global currency that all the AGIs use, right? And it's going to fund itself, and then it will use it to invest in itself to grow, and then to create like a sock puppet army of like artificial content producers. And we're already seeing on this on X, right? That essentially like further the growth of the AGI. And so if you're a person looking at this and your goal is really to bring about like a super intelligent AGI into existence, you should invest as much as possible into everything that would bring this about. It's a great read. We'll include it into the docs, and I'll share it with you as well too, Mesky.
Yeah, appreciate it.
Nice.
Yeah.
Sam, the passion and warmth that you talk about this topic it makes me think you might have an AI ticker or two in your back pocket as well.
I do, but we're not going to share anything on that small here. So
okay, we'll save it for the chat.
Yeah. Everybody should just go out and buy Bitcoin and be happy with themselves.
Nice.
Yeah, but
just buy
they do need a blockchain, right, to issue those tokens. So I don't think it's just going to be Bitcoin. It's unlikely to be just Bitcoin, and probably they could definitely use some of the infra that has been created by humans to be able to communicate, transact, and so forth. And I bet the one that is mostly used by humans will end up also mostly be used by AIs. So I'm betting EVM chains will not just survive but thrive.
Can they build their own blockchain as well at some point?
I mean, what sort of a blockchain? How do they?
I don't know.
How do they secure it, and how do they? Right? Why not use something that already exists if you want to move as fast as possible and capture it over time in certain ways? Like I can imagine an army of millions of agents conducting profitable trades and then capturing some network that is used by humans over time, and then things like that can definitely happen. Who knows?
Yeah,
we'll see.
I think the interesting thing about these like actual AI agents, and not just these online chatbots that we're seeing on Twitter, is that they're going to gravitate towards being chain agnostic, right? If they trade, once they're sophisticated enough, they won't care what blockchain they're on. Mm-hmm. They just go to where they get the best execution, right? And there's some very cool stuff, like very cool projects that are actually already working on this, but it still feels like very early innings. And I think 25 is going to be very exciting. And I think like the one thing I'm very certain of is that at some point in 25, the AI agent transaction volume flips the human equivalent.
Wow.
Probably. I mean, it's not hard to think about it, right? There's so much automated trading taking place already.
Yeah.
And it just gets shifted to agents instead of, I mean, like an agent is essentially a bot. So
yeah,
just more
a smarter bot.
Exactly.
Yeah.
Very
good
diligent.
time to sell block space.
Exactly.
Definitely. Guys, thank you so much for coming. Really wish you a lot of luck. Really hope that I know that you can't share the timeline exactly and it's not that clear, but hopefully it's soon, because I'm really excited to see some new dApps on Superseed and checking it out. And it seems like it's going to be a very unique and rewarding kind of blockchain. So much respect for building, and much respect, David, for taking initiative and seeing that if they don't want to build it for you, you have to build it
I'll build it
yourself.
myself.
Yeah.
And I actually think that, it often is the case that when a builder, whether it's a dApp, a blockchain, or whatever, when someone is building something because they want to use it themselves, it's often turns out to be a great product because someone really knows what they're going after. Like they want something specific, they need it for them.
Yeah. I agree with that. Yeah.
Well, thanks so much
Cool.
for coming today, guys. Really appreciate it. Enjoy your time, and you're always welcome back. We'll have to have you on once everything goes live, and we can talk more about all the builders which are deploying cool stuff on Superseed. And we're looking forward to having you back and talking to you in the future.
Thank you.
Amen.
Awesome.
And
Thank you for having us, guys.
for
Really
tuning
appreciate
in.
it.
Yeah. Thanks everybody at home.
Yeah.
And we'll see you tomorrow. Wait, I don't know if I'm streaming tomorrow. Tomorrow's Thanksgiving, but
Thanksgiving, no? I think you all are celebrating.
yeah, maybe the Europeans are doing something. But we'll be back on Monday then, if not on Friday. So
I actually think that there's a Llama Risk stream on Friday, maybe.
Maybe we'll see what Garrett does if he can run that one. All right.